Direct tax code, something that could potentially replace Income Tax Act. This is set to have a lot of implications for individuals and companies. We have tried to explain some of the issues that this could create in one of our earlier videos. Today, we go to an expert on the subject. We will speak to Akhilesh Ranjan from Waterhouse, who is also a former member of CBDT. First of all, tell us, Mr. Ranjan, do you think DTC can be more efficient than the Income Tax Act? And if so, how?
Or to answer that question, I think we need to understand the global developments in tax policy, also in tax policy in India, and what is the need for the future. Now, the last decade or so has seen a number of new initiatives on the global and multilateral level. It began with the automatic exchange of information, the FATCA law of the US, the automatic reporting of financial accounts under the OECD Common Reporting Standard. All those things are now there in the Indian law, where organizations have to comply. It went on to the anti-avoidance emphasis in the BEPS project. The BEPS reports, which are submitted in 2015, came up with a number of very important recommendations, some minimum standards, including the amendments to tax treaties, which could ensure prevention of abuse of these treaties, and also the very important country-by-country reporting, which introduced a new chapter in transparency of multinational enterprises reporting. So all these things, again, India has been at the forefront of all these initiatives and a number of changes in the law to accommodate these multilateral initiatives. And this was not the end of it. Thereafter, it was realized that BEPS was not enough to really allocate income in a fair manner or to prevent the shifting of profits. And so we had what is now known as the Pillar 1 and Pillar 2 agreements, ongoing work which is going on that in the OECD, in the inclusive framework. These will also require considerable amount of changes in the Indian law. There have been a number of developments on the domestic front also. We had the General Avoidance Rule in 2012, which finally has become effective in 2017. We had the Indian response to the challenges of the digitalization of economies, the Equalization Levy, 2016, and again in 2020. We had a series of anti-avoidance measures targeted at shell companies and others. There were a number of new financial instruments coming up, new financial structures like in real estate investment trusts, alternate investment funds, fund of funds, and so many things which required new definitions, new provisions in the law. So the whole thing now has become a collection of localized responses to the developments. And this is what the DTC can really rectify by rewriting the whole thing in a consistent and uniform manner. And that's not all. I mean, more importantly, in fact, is the need of the tax code to be in line with government policy. We have heard the Honorable Finance Minister saying that the government policy is primarily of predictability and stability of the tax system. Now, this is how it should be. And this, in fact, implies stress on compliance, and therefore, compliance requires a code which is simplified, which is consistent, which can be easily understood and implemented. So I think these are all the factors which are relevant and which make it necessary, I think, at this stage in India's development to really think of a new tax code.
Could you tell us which are the practical difficulties that any government could face while implementing something as complex as DTC?
While talking about a DTC, one has to keep in mind that any new law which is drafted can always give rise to new controversies. The law of income tax in India has been understood and interpreted by the judicial forums in a number of cases over these years. And there are a whole lot of words and phrases which are now judicially understood. The meaning is clear to not just to the judiciary, but also to the taxpayers and to everyone who is implementing it. The moment we rewrite something in a new language, obviously there is scope, no matter how simplified that new language could be, there is the scope for fresh controversies or problems of interpretation. So that's a practical hindrance which can then give rise to a new series of litigations. But then I think that is not something which should prevent policymakers from going into a new code. There are ways of drafting it in such a fashion that the generally understood words and phrases remain intact. It's only the maze of provisos and explanations and sections and subsections. All this can be sort of brought together in a consistent fashion in a way that these inconsistencies can be removed, while trying to preserve as far as possible the meaning of those well understood words and phrases.
So one of the questions that the government might have before implementing something like DTC is the impact on revenue collection. At a time when the revenue collection seemed to be doing quite well, even under direct tax or income tax act, sir, I wanted to know, what do you think would be the impact if on revenues or the government revenues if something like DTC is implemented?
Now, the new code, if as I said, if it is designed in a way that is in line with government policy at the moment, which is the policy of predictability and stability and increased emphasis on tax compliance, then certainly the new code should bring in more revenue in a more sustained fashion. You know, the globally now, the tax rates are stabilizing everywhere. Even in India, we have already stabilized the corporate tax rates. We have calibrated the personal income tax rates. So the tax rates are not really such a problem. The essential point now is how do businesses comply with the law? How does the tax administration make this compliance easier and make it more possible for taxpayers to comply in a proper manner? And I think it is now well understood globally that it's not an adversarial approach of hunting tax evaders that will really work now in the future. What will work is an atmosphere of trust and cooperation where the tax administration works along with the taxpayer and helps them to comply with the law. And the taxpayer in turn devises its own internal procedures in such a way that it can comply in a more easy fashion. And this in turn is designed to lead to sustainable revenue generation. This is the core of the Sustainable Development Goals that the UN has set for the world, and this is the core for the efforts of any developing and emerging economy like India. So I think, yes, a new code which can bring out a consistent and clear law, which can bring in the measures that can ease compliance, which can make it more comprehensible for taxpayers to comply. I think this new code will certainly, in the long term, lead to sustained revenue growth and to higher revenues.
Thanks a lot, sir, for this. It's been really helpful for viewers